Ladies and gentlemen, we'll move on to a panel discussion where we'll be talking about technology reshaping the financial services industry. CIOs are the forefront of driving transformation. This panel brings together technology leaders from leading banks to discuss how AI and data are enabling smarter decision-making, resilient operations, and personalized customer experiences, harnessing data and AI to build the bank of the future. And the moderator for this session is going to come on stage and he is going to announce his wonderful panel as well. Please welcome on stage the head of DIS Systems Limited, Faisal Ejaz.
Assalamu alaikum and good afternoon, ladies and gentlemen. Thank you very much for being here. I think it's been a very valuable day so far. I hope it's been a very valuable day so far for all of you. So just a quick introduction of myself. Faisal Ejaz, I look after, they call it DIS. So for all of you to know, it's Digital Infrastructure Security and Managed Services Business for Systems Limited. So this session that we have here, this panel discussion, I think it's very relevant to the overall theme of today's event. And I was reading this article the other day where it basically said that the banks that will be successful in the next decade are not those who have the largest branches, but it will be those who have the smartest algorithms. So banks who have the smartest algorithms. And that really struck a chord with me, that financial institutions are really reimagining themselves as digital ecosystems, and rightly so. And I think we've done quite decent in Pakistan. When I say we, I mean the financial institutions in Pakistan have done quite well from a technology perspective. We've digitized a lot of customer journeys. We've experimented quite a bit with chatbots. And we're actively now using predictive analytics for our day-to-day decision-making. So all that has been great. But with regards to AI, I think we're just starting to scratch the surface in Pakistan specifically, and there is a lot that we can do. And that is the exact purpose of this panel discussion that we're going to have. We have a set of very expert panelists here whom we're going to discuss that how do we leverage and harness data and AI to build that bank of the future. Now, not only from a technology perspective, but also from a leadership perspective, from a culture perspective, and as part of strategy as well. So without further ado, I'd like to welcome and introduce our panelists. So the panelist, Mr. Faisal Anwar, if you could please come on the stage. He is the CTO for HBL. Please, sir. Got Mr. Faisal Ejaz Khan, the CIO for Bank of Punjab, please. And we've got Ajanthan, Mr. AJ, the CIO for SCB, please. And we had another panelist, Mr. Faisal Ejaz. I haven't been able to see him, but it's easy. No, he's not here. That's fine. So please, thank you. Thank you very much for being here. Thank you for coming. Thank you for your time. Right, so now, when we talk about AI or the AI journey, I think the fundamental and the basic building block is data. That's fundamental to AI, and that's where we'll start. So my first question, AJ, is going to be to you around data specifically. That how do you see data democratization enabling business users across functions?
Okay. Hi, everyone. I'm AJ. Thank you, Ilyas, for the question. So from a data democratization point of view, I think this is a concept that has been there for a while and is also prevalent widely across many organizations already. There was a gentleman who did the presentation on Terminos, and we were also talking about Copilot or product Copilots and etc. So essentially what we do with data democratization is that we empower our users with data so that they can take better decisions with the insights. So that's what data democratization is, right? So earlier, data was something that people used to keep centrally and protect it. right? So this was also the case when technology was growing. Even a few only used computers in companies, others didn't get access. A few only had internet, others didn't have access, right? A few only had apps, others didn't have access, right? So this is a natural evolution of where data moves into a data democratization, and this has been happening over a period of time. So what it does is that if we keep saying that data is the fuel, this is more like refining that fuel and giving it to the petrol pump so that people can consume whenever they want to, however they want to, the easy way that they can take it, and make the best out of it, right? So I think that way, not just us, but most of the banks and others as well have done a lot of work already in bringing insights on the applications that users use today. It's not just for the front line, it's not just for operations, but you see this even in HR, you see it in risk. Anyone today makes a decision based on trends and based on data that they see. And that is extremely powerful, and that people did not have a few years ago.
Great. Thank you, AJ, for those insights. So my next question is, Faisal Anwar, to you, and we're changing gears a little bit. We talk a little bit about cybersecurity and risk in AI. That one of the biggest risks in AI is trust, right? I mean, we're not exactly sure about the decision making that AI takes place, and there is a little bit lack of explainability. So how can banks ensure that AI-driven decisions remain ethical and transparent and auditable?
So thank you, Ejaz, for asking me the most difficult question of the day just before lunch. So marks my day. So I think there are a couple of things. The way I would articulate this is, number one is the regulatory aspect that the banks needs to do. Then is the transparency. Then you look at the authenticity of that data. And last but not the least, the availability of those models available. So regulation put on one side, but when you're building a model, you need to make sure that you take the elements out first, number one, which is more related to hyper-personalization, which is to rightly tag to the individual, because the moment you start feeding in that synthetic data, you start kind of making the model bias. That's number one. You need to make sure the synthetic data feed that is going into the model is covering enough data points that makes it a neutral model. Because when we talk about this authenticity can only be established with the transparency. So giving you a context, if you feed to a model a gender-based data set, which is largely, let's say, around male-dominated, which it happens to be, even the room is male-dominated for now. So the outcome of the model would be more biased towards giving decisions whenever an input of a prompt is coming from a gender which is male-based.
Absolutely, yeah.
However, where you can say that, okay, a salary class could be a male or a female. So if you take that gender biasness out from the model, then you're talking about more decisioning prompt from risk profiling compared to its gender profiling. The same applies to when you go further deep down, you need to take ethnicity out from the context. So, and the race and so many other data points which can lead to a model which can start making biased decisions. Once you do that, you make the data set more transparent. When it becomes more transparent, it becomes more authentic.
Yeah.
That's one. You need to make sure that the model that is taking the feed in has an ample amount of historical data and the geographical event to make it a very authentic response to that data set. So, for example, you need to have a couple of Eids and a couple of, let's say, Christmas and so other many events put into that place so that the outcome of the data set is very, very authentic and yet very transparent.
Absolutely.
So once you do that, and that, while I close that point, so hence I always say this, that while you adopt the AI, the most important part of delivering this in a very authentic manner is how effectively do you govern your data set. So it's not about feeding the data to the model, it's about how well you govern the model and how accurate and the quality of your data set is to make sure that the AI output is more authentic.
I think
I've
that's
taken a bit longer route, but
no, I think that's very well articulated. So the quality of the data set that goes in and the governance of that data, I think those were the two key takeaways for me. So thank you very much, Faisal, for that. Faisal Ejaz, now we'll talk a little bit about scaling AI now, right? So we talked a little bit about the data that goes in. We talked about the risks. We'll talk about scaling AI. And what, in your opinion, are the skills and the organizational shifts that are required to lead an AI-enabled bank or an AI-first bank, as you might call it?
Thank you very much. First of all, I would like to thank Asif Peer, Asif Akram and Amara and the systems team for an excellent setup and event. Thank you very much. And for having us here and for the hospitality. Really great and excellent. So, coming to the skill debate on AI. We've heard this in the morning also. I think Jawad from McKinsey spoke about it. So did the president of HBL. Same thing. The deputy president of Mizan. So my view is that this is a multi-pronged approach towards skill development. So you are retooling people. You will reskill people. Third, what approach we've taken is that we are going out in the market and trying to get rookies who have some expertise and then get them in and train them on what we want to do. And then, of course, focus on really enhancing the knowledge of the current resources under us. And I'm specifically talking about the bank itself, so it's not a general conversation. And then the second part of intervention for me is the executive engagement. So you need to break and you need to send information to the C-suite off and on, telling them about bank and non-bank activities that the AI is enabling and making success cases either within the country, within the industry, or across the region or globally, whatever. The third piece that is imperative is the conversations that we are having with our teams. Do we really think that the data science people and the people related to AI, ML engineers, do we have those organization structures now as part of the discussion with HR, with our teams? Do we have people within the organization who have now access to C-level? So the CDO has people who are doing AI and ML work. The CIO has people who are focused on data, getting data science together. So in my view, the skill, of course, there is a gap. And I would like to agree to what Sayyid Amar Ali said in Mizan, that rather than having one champion of AI, it's better to sprinkle AI in the field and let it germinate with weeds and your crop and everything else. And then you can pick and choose which one you want to scale and then put it in production and do that. So it's a steep curve. We really need to work. We don't have a lot of time. Anybody who's talking about 5 years and 6 years of skill is out of zone. The best you have is about 11, 12 months. And in that, if you are able to absorb and really understand what is coming your way, from what part of that big wave you can benefit, and how your people are going to get over the curve quickly so that they're able to really understand and absorb this change, which is a big one, and also become part of the transformation that you want to do in the organization.
Great.
So this is my take on skill generally for AI.
Great, thank you. Thank you very much for that, Faisal. So as I understand, the scale AI horizontally, and I think Asif also spoke about that, and you're also saying the same, that instead of verticalizing it, have it across the organization, enablement across the bank, and of course, having the right org structures as well. So great, thank you very much for those insights. So my next question to you again, Faisal Ejaz, is that if you had to pick one function in banking, where AI will have the most transformational impact? And this is not a trick question. Where you will have the most transformational impact over the next, say, 3 to 5 years. What will that be?
So when I was sitting with Asif, as a matter of fact, when Asif, we were presenting and there was this big wheel he put up. And, I wouldn't want to pick one. So I have top 3 that I would like to put across the whole audience. And then the pearls itself. So in the pearls also, I find the first 3 pearls are very pertinent. And probably I'm going to copy that PowerPoint and use it internally. So I've already asked for a copy and, do some piracy thing, very Pakistani, but anyway, we are immune to that. So, and then the best part in the wheel was that I think lending is one, call center definitely the other. And for me, the third pick is to do with fraud.
Fraud, right.
So on that, BOP has had some experience. We've done a lot of digital lending and we've done a lot of ML, machine learning. And we had partners who did it for us and then we had consultants who did it for us. But then for the chief minister's schemes, we created our own models and we've done them through ML and for every new program that we are running, we are using those models even for SME and agriculture and even for social programs.
Very nice.
So that's one. And for the SME piece, we created an end-to-end digital solution and we got first prize from the State Bank. And of course, people here and there, they were all competing, but we took the first prize. So
in a good way, of course.
We have the best SME digital solution in the country at the moment. And we've dispersed more than 350 million on it. And it is a 6-minute process. And we have more than 30,000 customers at the SME level on that. And we have been getting prizes and we will get one on Friday also in the PB award probably for this. So we are very happy with that. Coming forward on the call center side, I think we have large government schemes. And we are not the likes of HBL in terms of volume or the likes of Mizan in terms of volume, what they get on the call center, it's huge. But we are no less. We are probably number 3, number 4. We get about 38,000 calls a day, every day. And we really we cannot hire more banking officers. So we really need tech. And my target is that by June 30th, 2026, I will have, if not purely Agentic AI, but some kind of AI interaction that will manage at least 20,000 calls per day. So I have a clear target. I am moving towards that target. I have partners who are working with me. We've done an RFP for that and we are talking to the likes of big people like Salesforce and people like Edo and Mercurial Minds. So we have partners who are working with us on this. So we will implement that. So for me, that's very exciting. It brings real value. It will really create it will really remove a lot of noise and distortion from the call center. And then we can, about 15,000 calls that we get is where we do cross-sell, where we really create value for the customer and we listen to the customer and really create value for ourselves and for them. So this is the piece. And for the fraud risk, which is the third piece, we have a local partner from Pakistan. And we've already planned a whole roadmap that we will implement in 4 months. It is a Microsoft stack, a cloud stack that we are implementing on-prem. And on that stack, we are implementing a full AI engine, which will run, of course, it's rule-based. The second step is going to be trained by humans. And then the third step is going to be that we will try and run it on an agentic scale. But not in 2026, but in 2027.
Sure.
So to do all of these 3 things, I just want to add one layer that at BOP, we are creating an AI factory. So we are deploying GPUs and all what needs to be done in terms of hardware and software to do an on-prem implementation. And we already have a few machines. We've asked Cisco to provide us some. So we will be doing a full GPU stack with, on one side it will be Red Hat OpenStack, and on the other side is going to be the Microsoft stack. So these are going to be two of our infrastructures that are going to support the implementation of these 3. The one that is done is already supported, but the remaining 2 that are coming are in the pipeline.
Very nice, very
Thank
interesting.
you.
So thank you very much for that, Faisal. So the areas where AI will have the most impact as per Faisal, lending, call centers, and fraud and risk management. So thank you for that. Now coming to fraud and risk management a little bit again. So AJ, my question to you, that how are banks using AI to detect fraud? I mean, you can give an SCB example as well if you'd like, but so how are generally banks using AI to detect fraud and manage the operational risks more proactively utilizing AI?
I think fraud is one of the areas where banks started using AI first because they didn't have a choice. The last presentation also showed trillions of payments that are going. It's humanly impossible for a person to be predicting or looking at patterns across so many transactions. And be it SCB and many other banks, it is in AML and fraud-related risks related to payments, be it SWIFT or wherever. You see the early cases of AI through machine learning and all of that came in this area of fraud, right? Where there was an immediate need to have intelligence that can work much, much more faster than the cognitive abilities that a human has, right? So in terms of fraud, of course, the game has now scaled up because of the introduction of AI, gaining the kind of access it has to LLMs and the models that have been coming out in the recent past, right? So fraudsters are actually using AI to get smarter and to hide the patterns that we have been capturing through traditional AI models. And as banks, now it's our job to ensure that we catch the frauders before they can hide the patterns or figure out that they have hidden the patterns, right? So of course, it's gone to another level of combat when it comes to fraudulent transactions. Again, this is a very interesting evolution and it's a very important piece because this, as Faisal Saab also mentioned, will remain a key area, at least for banking, where AI will dominate the most.
Yeah.
And it's essential because the more payments you're able to proactively protect, one, of course, for the clients and the regulators, you're doing what is right. And second, even reducing your false positives. If you're just marking too many payments as suspicious, it falls onto your humans, right, who are in the loop. And you don't really want to do that as well. And when you have trillions of payments going through, even a percentage of it, even if it's 0.0 whatever percent, comes as big volumes to our humans to then address, which also is something that we don't really want to. So I believe in this particular area, I think Zain Setna in his previous session also mentioned this in terms of payments and he brought the analogy of a Sherlock Holmes, a digital Sherlock Holmes. I think that is what it'll become. We will continue to use AI to detect and protect, but the way that we use to identify cues will go beyond, what an AJ can do to maybe a Sherlock Holmes can do one day.
Yeah, and billions of such Sherlock Holmes. Absolutely. So thank you very much for that, AJ. So Faisal Anwar, coming back to you. I don't know if it's still another difficult question, but this is a question that I think everyone is waiting to hear the answer to and is very relevant to the theme that we have of this event here, that if you were to define the bank of the future or say bank of 2030, what would its core technological differentiator be? So bank of the future, what's the technology differentiator?
I think before I can relate to the question, I can relate definitely to our meetings. So now you're reciprocating that I always ask you a difficult question, so you made it a point that we settle it today. And so has Asif pointing back on me. So I, honestly speaking, I don't have a time machine to contextualize it. So I'm going to give 2 or 3 caveats out, and then I can say that with the larger amount of confidence how it would look like. I think the Governor Saab earlier in the day also mentioned about the rules and regulation around taxation, because the economies of scale revolves around how the taxation rules are well aligned with the larger ecosystem to digitize the payment space. So that's number one, because you kind of have a system running on the side, which is one aspect. So if we assume, I'm just trying to contextualize because we're talking about the forum is about AI and banking and all of that. So I'm contextualizing it so that it is well understood. So if we take that context out for 2 minutes, so we assume that everything is favorable, including the taxation, and the money in circulation actually comes and gets routed from the banking channel, and it is digitized. So with that context in mind, the way I see it, number one, you will not see too many bricks and mortars around. I will not use a phrase to take the thunder away, because that's a term that Terminus uses, bank in a box. But I think it would be a bank in a computer, and it would relate more towards, I think, an analogy driven from how the journey of DBS has been. Yeah. That you have more technologists in a bank versus more financialists. So the financial people will become the financial tech engineers. So technically you can say that they will be working behind the scenes to train and underwrite those models which would be interacting with the humans to make sure. And why I'm saying so that's another part of the context that needs to be very important. If you see the banking from the times that I've seen my father banking to the times that I have seen banking and the times that I see my kids going to do banking, has largely transformed. So I still remember taking a brass coin from the National Bank to get a check being cleared, from taking a token from a bank to take a bank check being cleared, from not having the energy and time to go to a branch to deposit or withdraw a check and use an app to make that payment. And the journey continues. So it will eventually become a lifestyle, and people would actually only bank with the bank who is more aligned with the lifestyle. So for an argument's sake, I would not have the time to go to a bank and have somebody underwrite a loan for me and take 7 days and tell me whether I can buy a car or not. I would be more wanting to go to a showroom, take a picture of a car, taken into augmented reality. We're making certain assumptions around it that the car is not gone under major repairs and it's in a decent shape. So the augmented reality picks up and says that, okay, by the way, you have picked up a Honda Civic, and it's an RS Turbo, and so this is the price, this is how much this is the amount of financing, I've looked at your credit score, it seems okay, but I can only finance you up to a certain point. But keeping in the regulatory aspect so when you do all of this augmented part, you say that, oh, by the way, everything set aside, though you are eligible for a loan which can be of a full amount, but the regulations say for an unsecured or a secured lending, the maximum limit is this, so I can actually take it as far as this. So this is how you transform that. There is now no bank. Practically, you picked up an app, you took a picture of a car, and all you want is to walk out from that showroom, not from a bank branch, sitting in the car, driving home. So that journey, as it pans along, it will change a lot of things. So what happens is that your credit risk officer who underwrites, he needs to be retro-trained. That means now he becomes a financial engineer who starts training a model for doing all of that. You will have embedded finance being done, because before you hand over the key of an asset to an individual, you will actually call out of the bank in open financing or embedded financing, whichever you phrase it, and you say, oh, by the way, I can get you an insurance also. And while you are doing all of that, you'll say, oh, by the way, I have 3 insurance companies from you can get your car insured, ranging from this percent, that percent, and that percent. And there's a 4th one available, but that offers a tracker. Would you still like to go with it? So this is you hyper-personalize it, you embed it with the lifestyle, and you retro-train all your internal staff to become, lack of a better expression, you want to call them a data scientist or you want to call them financial engineers. So this is how I see this story being panning out. I don't know if I would live to see this happen, but at least in my personal opinion, this is how I see things.
No, I think it's going to happen sooner than we expect. So thank you very much for explaining that. That was very insightful. So I've got a few questions, but my marketing folks are saying that we're out of time. So we'll maybe just take a couple of questions from the audience.
This is Mehak from HBL. My question to the jury member is that how AI help auditing field, how we can embed AI tools for a conventional audit.
Great. So thank you very much for that question. One of you would like to take that. So how can we use AI for internal audit? And I think as CIOs, audit is something that you face.
I would prefer if audit goes away because of AI.
Is she also from your team?
She's from HBL.
No, I know, but for now. I mean virtually. So the way I think, I'm not an audit expert, so I will not claim that to be an expert in that field. But if you look at it, a lot of synthetic data that we have in the banking. So I'll give you an analogy that I've worked in my previous life. So fraud and forgery, we touched upon it, right? So if I take a sample of signatures, I take a sample of checks, which is in circulation, and I feed them into a large language model, and I train that model to say that, okay, it's when, and I take my signature card, which is in every bank, and I feed all of this, and the cross-section is that when a customer named, so let's say me, Faisal Anwar, writes or makes his signature, the pressure on the nib is roughly that much. The data points which you can relate to using a vector is that the nib flow is always like this. So if you pass off all of this data point and you start auditing, you would be able to very decently pick with a decent percentage, depending on the model maturity, that whether that check is being signed by the real person or it's a person who is impersonating Faisal and signing on behalf. Why? Wow. Because flow of the signature, the dots that connect, which creates that impression, plus the vectors that you have made there. So that's one context that it can help auditing. Then you have other mechanisms like you will start picking up those data points, start feeding back into it. So it's about first building a knowledge repository and then backfeeding the real data into this knowledge repository and finding out the false positives around it. Once that part is done, you have to knock off the noise out of it. I really don't want to go down a lot on this path because otherwise we'll be here for the rest of the evening. So you need to make sure that you model train so that it does not hallucinate. You model train so that it is not jailbreakable. You put the guardrails around the model so that the questions that is being asked, every time when they are being asked, are being responded in the same manner. So for example, if I ask a question, can I go home? And I'm just making it simple. Every time it should respond that, oh, Monday to Thursday, you can go home at 5:30. It should not happen the third time when I ask, oh, can I go a bit early today? So they said, no, today office timing is 1 to 4. So that is consistency and transparency and accuracy of that model, that you govern that model to an extent that every time you ask the same question slightly differently, the output should remain the same. So I hope that I've tried to answer the question, again with this disclaimer that I'm not an audit expert.
I think those were very, very relevant questions. So I'm sure we have a lot more to discuss, but unfortunately we've run out of time. So gentlemen, thank you very much for your presence. Thank you for your time. Really good to have you here. Thank you. Thank you, AJ.